What does Trump expect? Oh, I believe he expects violence. I believe he expects confrontation. I believe he's working toward a civil war.
Get this man out of here now. But if that doesn't happen, and we're not promoting it for 1 second, but if that doesn't happen, there will be violence. Yes. And these people had the opportunity to stop it. And they didn't.
Well, here's the good thing. The good thing is that Donald Trump is going to be the oldest president when he leaves office, assuming that he makes it to 4 years. And so then we can talk about elder abuse of Donald Trump then. In the meantime, we saw Joe Biden actually speak and give interviews and respond to questions about some of these specific pardons, particularly for the January 6th committee that are being referred to.
One of the things you told me about is what you call
insane.
Magic money computers at the Treasury.
So
tell us about it, because I never heard of that until you brought that up.
Okay, so you may think that that the government computers like all talk to each other, they synchronize, they add up what funds are going somewhere, and it's it's coherent. There's and that the numbers, for example, that you're presented as a senator, are actually the real numbers.
One would think.
One would think. They're not.
Yeah.
Okay. I mean, they're not totally wrong, but they're probably off by 5% or 10% in some cases. So I call a magic money computer any computer which can just make money out of thin air. That's magic money.
So how does that work?
It just issues payments.
And you said there's something like 11 of these computers at Treasury that are sending out trillions in payments?
They're mostly at Treasury. Some are, but there's some at HHS, there's one or two at State, there's some at DOD. I think we found now 14 magic money computers.
14, okay.
They just send money out of nothing.
It's up about 200 points before that, is maintaining that gain, although losing a little bit of ground there, John. But the big anticipation now is going to be to the 2:30 news conference from Jay Powell to listen to any hints he may give about when he might eventually start to bring those rates down even further as we head into the rest of the year.
All right. Well, the Dow's kind of bouncing around. The 200 market was down as low as 79 during the briefing, but now up around 200. So that's good news for today. And for anybody who's got a 401k and is looking forward to retiring, though the levels are still down about 3,000 points from where they were a short time ago.
Well, I think one of the keys here, as I'm sort of digging through the words of the Federal Reserve, is that they are maintaining that goal. Remember, they have a dual mandate. They look at employment and, of course, they look at inflation. And it appears that the goal is still that 2% inflation. And if that's the case, he might not want to lower interest rates too soon, because obviously that could fuel, a little bit of an economic boom there. So if they're trying to get to 2%, they're going to leave it unchanged now. And now the question is, when will they finally start to cut those rates?
Hey guys, Carlos Cortez here with another episode of Scriptures in Wall Street. I hope you are doing well. Today, we're basically going to be talking about the markets and what the anticipation of what should to come. We know that the markets have retraced about 23%. And what are we supposed to do? How is our retirement? How's the future look? Are we getting in right now? Are we making changes right now? There's a lot of questions. The volatility index is increasing. Well, we're here to talk about that today. But before I get started, wanted to say my disclosure here. For those of you that are listening right now, everything on this podcast is meant for information and education purposes only. This is not financial advice. Even though I am a financial advisor, everything on this podcast is not meant for financial advice. If you would like financial advice, give us a call at 813-448-3446. Also, if you would like a free copy of our guide, all you got to do is go to AmericaFirstRetirementPlan.com. AmericaFirstRetirementPlan.com. You can download a free guide. If you are a current client, just email me at info@CortezWM.com. I'll send you a book. If you're not a current client and you would like to engage with us, all you need is a 10, 15-minute conversation. I do not mind sending you a free copy of our book. That way you can have it in your hands. I wrote it so that you can understand our message, understand our perspective, and why we want to keep our money safe, transparent, not fund the woke other countries and communistic countries, and keep money in America, and actually work with a fiduciary that believes in what you believe in. Speaking of which, we've gotten a lot of calls this year, this week alone, of their current advisor, Edward Jones, Morgan Stanley, you name it, Fidelity. And they talk about the crashing dollar. They talk about the stock market. They talk about precious metals. And their current advisor has no idea how to respond to it. Well, I'm here to tell you. It's about time that you speak with an advisor that believes in what you believe in. That's how powerful this is. Like, you're getting your advice from someone that doesn't believe in what you believe in. So the foundation is completely wrong. You see, when we talk about red money is a bucket of money that has unlimited losses, unlimited gains. You have no control. You have unlimited fees. You have unlimited risk. You are 100% correlated to the market. More importantly, what this actually causes, it causes an environment for you to have FUD, fear, uncertainty, and doubt. Fearful because you don't know who to talk to, uncertain because there is no plan in place, and doubtful because there's no one you can talk to that you can like and trust. The FUD kicks in, and we understand that 2 Timothy 1:7, it says, "For I have not given you the spirit of fear, but of love, power, and sound mind." But yet we, every single day, play with our red money and hope for the best. Hope is not a retirement plan, guys. Hope is not a retirement plan. So we want to make sure that we're intentional, that you have the ability to take advantage of the downward markets. You have the ability to take advantage of the upward markets, and that you can continue living your retirement and not focusing on the FUD. You see, we got a lot of volatility right now. We have Jerome Powell speaking this week. Lord knows what's going to happen there. And it's going to be more volatility. So buckle up. It's going to be a crazy week with this Fed announcement. Tariffs are coming into fruition. There's a lot of things happening right now. And unfortunately, a lot of America is just a sitting duck. And it doesn't have to be that way. You don't have to be in red money. You don't have to do it. You need to ask your current advisor, whoever you're working with, what are we going to do if another 08 happens? Are we just going to stick in treasuries? Are we just going to ride the markets and hopefully it comes up? Trump is in. Do you believe that? Do you believe that Trump's going to increase the stock market? Maybe overall, maybe not this year. But I said it last year. If Trump was to get in, they will crash the markets on him. And it's not because of Trump. It is because of the cycles. It is because this is what happens when you have manipulations. Also, if you look at the yield curve, I've said it before, they lowered the interest rates in 2000. You saw what happened in 2001. They lowered the interest rates in 2007. You saw what happened in 2008. They lowered the interest rates in 2019. You saw what happened in 2020 and in 2021. They lowered the interest rates in 2024. What are they going to do in 2025? Every time they've lowered the interest rates over the past 9 out of 13 times, the market has gone down. They lowered interest rates last year. The bond market literally crashed in 2022. We had a massive, massive fallout with rising interest rates. Bond prices just plummeted. Now bonds probably have a high chance of going up. Not only is the stock market going down, but now we have a huge demand for bonds. And so look for those bond prices really to go up. So conservative funds, you're in bonds, you're probably going to make your yield, and you're probably going to possibly make appreciation on the bonds. Hopefully, your advisor knows this stuff. Hopefully, they have a chart where they can show you, hey, this is where the navigation of the market's going. It's going up, down, sideways. This is what we can do to pivot. And so this is really, really important. As a trader, I love trading. I love looking at the market, swing trading. I even day trade. But more importantly, I'm a retirement planner. In the retirement planning side, we need to be focused on keeping your money compounding and keeping your money safe. It takes years and years to build wealth. This is not an overnight thing. This is something that we specialize in, and we're more than happy to help you out. All you got to do is give us a call. We want to help. You probably clicked this link because you don't trust the stock market. You know that it's manipulated. You know it's rigged for the big banks. You know that you can be financially inoculated with everything that's going on. And the reason why you're here is because you might have some FUD. Fear, uncertainty, and doubt. Fearful because you don't know what's going on. Uncertainty because there's no one to talk to. And doubtful because there's no plan on what is about to come. But one thing, when it comes to retirement planning, if you don't have a game plan for whatever is about to come, then you are not prepared. It's time for you to protect your money outside of buying gold and silver. This is going to be the best thing because you're protected by contract law. Completely different animal, guys. Again, Carlos Cortez here. Hope I can hear from you. And let's just have a conversation to see if this strategy works for you. So when we talk about FUDing, fear, uncertainty, and doubt, we also understand that this is the actual thing that people are facing. We don't know what to do. Jerome Powell speaking today of this recording on March 19th. And so, but I wanted to just check in with you. Like, what are you doing now to prepare yourself for a market correction? We're already in that territory. We're down 23%, by the way. And if you're just stuck in mutual funds and red money, as I said before, you have no control. Your mutual funds, your stocks, your bonds, your 401ks, your IRAs, everything that's invested in a mutual fund, you're just out there like a sitting duck. And so when you have passive investments that do not tactically get in and out, or you don't even have green money account, your advisor doesn't know what that is. What's worse is your state probably doesn't even allow it. Yes, there's states that don't allow for the safetiness of your money through an insurance contract. Believe it or not, it's state by state chartered, ordained. There is something called the NIIC, the National Association of Insurance Commissioners. They deemed by their state legislations if you can have a safe money product in your account or not. Now, you tell me one reason why your state would not want you to have a safe money bucket to invest in. Tell me. You can infer intent by the results given. So if your state does not allow for you to protect your assets, and you're a southern state like Tennessee, hello? But when it comes to financial products, they don't allow for it. They make it very difficult, just like Missouri, just like Michigan, just like Wisconsin. Yeah, you would think, hey, these states are going to allow me to do right things. And no, man, like it's bad. There's all these safe money products that are out there. And because of your situation, because of your state, you are confined to those rules. Now, as a Floridian advisor, I could help you. We have different products. You don't have to fly over here. We can just have a conversation. I could shop around 40, 50 different companies, scan it by face mask procedures, meaning if they face mask their employees, we don't want to do business with them. If they force vaccinated their employees, we don't want to do business with them. If they're pro DEI, LGBT, we don't want to do business with them. If they're pro ESG, we don't want to do business with them. So what this basically means is that 99% of the companies that are out there that are not even A-rated, we don't want to do business with them. They are not even allowed to do business with us. Like we don't want to deal with them. This is how powerful this is, guys. You can infer intent by the results given. Do you really want to have your advisor all boosted up, vaccinated up, and tell you what is right or wrong with the markets and tell you from a moral standpoint what is right or wrong? Like that's the person that's leading you into your financial summit, to the financial red zone. You're about to score a touchdown. You cannot afford to lose. And you're getting right into that. You cannot make mistakes. You are getting at an age where you cannot afford to make mistakes. Guys, if you lost money in 2001, it took you 6 or 7 years to get your money back. If you lost money in 2008, it took you 4 or 5 years to make your money back. If you lose your money in 2025, how long is it going to take you to get your money back? What if the market does do its thing? I was talking with a client that actually drove down from Missouri this morning. He said, Carlos, I can't endure another 3-year recession. I can't do it. He already been through the 01s. He already been to the 2008. He asked me point blank, are we going to have another crazy time like that? I said, the only thing I can think of was in 2001 when the dot-com bomb era, the markets were down 20, 2000, 2001, 2002. The markets were down 3 years in a row. The NASDAQ was. The only thing I can think of is this Project 2030. If we have robots, we already have robots cooking up food now. Like there's robo cooking. That's a big thing. Like 15% of, I believe it's even higher than 15%, but more than 15% of the restaurants are now utilizing robotic cooking to serve fries, to make fries. Like they have these arms that can go in a deep fryer and they don't even need to move. The robot sticks his hand in the deep fryer, takes the fries out, throws it to another robot. That robot puts it in the expo, and from that expo, it gets wrapped up and plated, and a robot brings it out to the customer. Like if you go to most bowling alleys, they have this where the cook is in back there. He's a human, and if you order chicken wings, a Diet Coke, and a pepperoni pizza at the bowling alley, you're getting a little robot that's delivering to your lane. We're already seeing the implementation of that now because of the self-drivers. Because of the transportation as a service, I don't think it stops with transportation as a service, right? Where we have selfless cars driving, picking you up. Uber's going to get attacked unless they pivot into more of a TaaS, transportation as a service. We're going to see that with the taxi system. We're going to see that with the bus system. We will probably even see this with airplanes. I think they're trying to make airplanes. And this is me thinking, this is my opinion. What if I told you that they're making airplanes more dangerous to fly? It is actually mathematically and statistically safer to fly on an airplane than get in a car. People die from automobile accidents and alcohol more than any other drug, more than any other event is car accidents. Especially when you combine those two, alcohol and car accidents, it's a recipe for disaster. But with airplanes, the odds of you crashing an airplane, a commercial airplane, is rare. Even a private airplane, and the airplanes that do fall down, a majority of them are pilot error. Rest in peace, my friend Dwayne. Here's a picture of him. He was a pilot that explained that to him. I want to smack him when I meet him in heaven. He told me all the accidents, plane accidents, are pilot error. And of course, 2 years later, he dies of his own error in a plane accident. Love him. Great guy, great advisor, great green money advisor. Learned a lot from him and was a very passionate, God-fearing man. So rest in peace, Dwayne. He passed away about 2 years ago, but he came down to one of my client events, and him and his wife were in the airplane, and they both passed away. So that's why I wanted to bring up the airplanes and transportation as a service, because transportation as a service is coming, guys. It is coming. Like the robots are coming. Elon Musk, whatever ushering of the new world order that he wants to bring on, it is coming, guys. So we have to reposition our assets. We got to reposition our assets more than ever right now. There is going to be some opportunity of growth in the NASDAQ. And the reason why I say the NASDAQ, because it's technology based, it's healthcare based, it's huge in technology. The Magnificent Seven is in it. It is powerful. And if the NASDAQ is not growing, then we got bigger issues than the current economy. This is why I like the green money side of the QQQ. We have a great carrier. Everyone is available for it. Unfortunately, for my people in North Carolina, I can't write it, but you could literally get 120% of the QQQ, which is the NASDAQ 100. If you look at the returns on it, it's powerful. Like we could literally double your money within 3 to possibly 6 years. So if you had $100,000, yes, it would be $200,000 from a projection standpoint. Your principal is guaranteed by the strength of the insurance carrier we decide to go with. But if you follow that particular index, It is so powerful. Historically, over the past 30 years, it's yielded over 18%. It is massive. Like, why wouldn't you want to invest in something that you cannot lose and you don't pay a fee? It's bonkers to me. It's bananas. So it is a portion of your portfolio that you can roll over, a portion that you can carve out of your IRA, whatever that is. Find a green money account. That way your advisor, you or your advisor, has a safe place to talk about. Newsflash. Many advisors don't have access to it because they're constrained by their vaccinated broker-dealer. They're constrained by their state. They're constrained by their job. They cannot recommend anything outside of the Fidelity, UBS, Edward Jones umbrella. It is considered selling away. It is considered doing the bad thing because the company doesn't make money off of it. AKA, they don't pay them to recommend something that's good for you. So, as an independent fiduciary, the reason why most advisors don't recommend precious metals, tangible precious metals, is because we don't get paid to offer it. That doesn't mean it's bad for the client. We have Cornerstone. I said, call Cornerstone. They're great at what they do. Cornerstone is magnificent. They're God-fearing based, faith-based company, and they will deliver right to your door. They're an amazing group of guys and gals. So give them a call. Cornerstone is who I recommend if you want precious metals delivered to your door. Their number is 888-747-3309. My friend Terry is a great guy, a great man of faith. I have nothing bad to say about them. And I have switched to other gold and I tried other companies, but this is the best one. This is the best one that I can trust to put my clients with. They will be taken care of. Their fees are, look, they're a for-profit. They're going to charge fees. We understand that. I charge fees. But look, they are reasonable. And 90% of the time, they're going to be cheaper than anything that you can find with these bigger podcasters, with these bigger shows, with the Fox News and the patriotic advertisers. They don't advertise like that because they rather spend the money on giving you a better product than screwing you over 20, 30%, sometimes even a 50% sales charge. It's ridiculous, the stories I'm hearing with precious metals. And look, gold is going up. Gold is going up. There's momentum. I'll show you the charts. I'm not joking around. It's not the time to buy gold. I believe it will come back down, but it is going up. We've kind of missed a boat on it. If you don't have precious metals, it's over 33 right now. And I was recommending a portion of your money in silver when it was around $27. Great time. Now it's at 33. So it's been up a good 40%. About 30%. But yeah, get involved. Call them if you are frantic about the volatility, if you want a certain portion of your portfolio, or you can give us a call, 813-448-3446. You can also visit us online at cortezwm.com. For those of you that just want to download our guide, go to americafirstretirementplan.com, and you can also request a book over there. Very simple, very simple. So I wanted to bring up some charts here real quick. Jerome Powell speaking today as I'm recording this, and my weekend show is going to be at the 2 o'clock. But let's go ahead to Forex Factory real quick. Now, for those of you that don't know what's going on, I always go to forexfactory.com. We can see all the news. So today, Tuesday, March 19th, we got federal funds rate coming out at 2 o'clock, red folder. This is not a good time to trade if you're trading. Economic projections, as well as FOMC statement. We know the press conference, red folders, literally for 30 minutes. It's going to be hectic. We are in a Japanese bank holiday. The Australian markets are coming out with employment change, unemployment numbers, and the 1 year and 5 year on the Chinese market. So pretty interesting. FOMC, like they don't know what's going to happen. Like I think they're going to stay put or lower it. So I don't think they're going to raise it, but I think they're either going to stay put or possibly lower. If they lower it, then it would send shockwaves to the market, which I think it's going to send shockwaves to the market regardless. So We'll see. We'll see, guys. But let's go ahead and pull up some charts here. So this is my day trading chart, guys. Looking at Bitcoin real quick. So Bitcoin is coming down, as I said before. Might be a great opportunity to get in. Let's see if my trade goes well. About 15 contracts. And we're going to put a stop loss here. Okay, so we'll put a stop loss. Take profit right there. Modify. Stop loss at 84. So this is a scalp trade, guys. This is not meant for anybody to... Oh, look at that. Just made... my trade just hit. That was like, I didn't even have time for my stop loss or take profit. It just literally made 15 contracts. So that was pretty powerful. Yeah, so Bitcoin is just screeching down, and we just made some good money there on live. I don't recommend anyone doing this. That was a $1,500 trade right there, just in 2 seconds. It just fell right through. Pretty amazing. And this is on a paper trade account. This isn't real. It's a real trade, but I'm using a paper trade account, so a demo account. I don't show my real account here on public, but yeah, this is a paper trade account. And yeah, if I made a real trade, and that was $1,500 just in 5 seconds. Pretty amazing. Do I trade again? Nah, I think we're done. But that was pretty cool doing that live. All right, actually, I wanted to wait till this weekend, but I really want to just go live right now and just have Jerome Powell speak into the podcast. We're going to watch it live on Woke Bloomberg, and we're going to see like how the markets react to whatever he's going to say. I don't know if he's going to lower interest rates right now or if he's going to keep it stagnant, but we're here. I was going to do this weekend, but I'm recording my show early so that we can talk about it, and because I'm actually going away to California this weekend for a Christian men's style boot camp. So I won't be present here Thursday, Friday, or Saturday. I'll be away in California in the deserts doing some combat training with a bunch of guys that want to better themselves. So militant training. Got to stay sharp. Anyways, we want to see what's going on here. I'm going to bring Bloomberg out, and we're going to see the reaction here shortly.
Use a pop in yields to extend duration a bit because we do see the economy slowing down in the second half, but we're not ready to do that, and we're staying up in credit quality because we are seeing a deterioration under the surface in some of the weaker credits. So we're just kind of hugging the benchmark and waiting to see what happens.
Hey, Kathy, appreciate your time this afternoon. As always, Kathy Jones and Charles Schwab alongside Aditya Bar of Bank of America. That decision 2 minutes away. Bob Michael, just a final word going into that decision.
What I heard from Kathy is they're buying bonds because, like us, they're seeing net inflows to the bond market. So you can be neutral. You're still buying bonds. I like the bond market here. We're buyers on backup in yields and credit spreads.
I imagine you're not alone saying that. Is there this wall of money that people talk about? Sounds a little cliche, but is there a wall of money?
So this is what I've been saying for a long time, that not only are people buying bonds because they're afraid of the markets, but they're buying it because it's actually priced well and you're getting a discount. And we're going to see an influx of people that are running away from the stock market whenever it does collapse. They're going to buy these bonds. On top of that, you get the demand of the appreciation of the bond, plus the yield. People are going to chase the bonds because they're getting that yield, and they're not satisfied with the yield that the dividend markets are paying. So lowering interest rates on top of people rushing to bonds and treasuries, it's going to be a big thing. So just pay attention to that.
Waiting for any backup in bond yields?
Yes. All kinds of pools of investors are under allocated to public fixed income.
seen a massive sentiment shift to Europe and other parts of the bond market, haven't we, in the past year or so? This one's a big one. This really is a big decision. This is a tough decision, not because they're going to move 25, 50 basis points. It's not about that this time around. It's about how you navigate these policy changes, this effort to push a global realignment driven out of Washington, D.C. You've got to try and gauge the response of other actors, China, Europe. You've got to understand what it means for markets, consumer expectations, how that's going to translate into things like inflation, growth over the next several months, and somehow put out projections for the world to interrogate.
Which people will have to understand is something of a dartboard throwing darts at it. Some of the questions, and I wrote down a whole host of them that I have.
Of course, they're a few minutes late. Jerome Powell is always
One of them
late.
is, are you more worried about stagflation-like conditions today than you were on January 29th? And if so, why? What has changed? And see how that gets navigated.
I look at their dual mandate quickly here, John. The dual mandate, it's all about labor, and it's moving the second derivative of some of those theories. Bernanke would say there's a lot of hockey sticks out there.
And is there a stagflationary mix in these forecasts? Remember, this is a three-part act. In about 10 seconds' time, you get two parts. You get a decision and the forecast. 30 minutes later, you will have a news conference with Chairman Powell. The equity market going into this one firmer by 0.4% on the S&P 500. With the decision, is Mike McKee.
There we go.
I was wrong. We do have some news today. No change in rates, but a significant cut in the Fed's view of growth over the next 2 years. A majority of the committee moving lower on the dot plot, even though there's still two cuts forecast for next year. There's a pause in QT and a descent on that. The benchmark rate stays the same, 4.25% to 4.5%, but the policymakers cut their median GDP forecast for this year to 1.7% from 2.1%, and next year to 1.8% from 2%. Headline PCE inflation rises to 2.7% this year from 2.5%, and core to 2.8% from 2.5%. The unemployment median for this year is now 4.4%, up a tenth. In their statement, officials removed language that risks to the employment and inflation mandates are roughly in balance, now saying the committee is attentive to the risks on both sides of its dual mandate. They emphasize that by saying uncertainty around the economic outlook has increased. That's reflected in the dot plot. 8 members now see one cut or 2 cuts or fewer. The median stays at 2 cuts with 2 more for 2026. The Fed, beginning in April, will slow its balance sheet runoff to $5 billion a month from $25 billion for treasuries. It will retain the $35 billion cap on mortgage redemptions. They don't attribute the change to anything, not to the debt ceiling, but we would expect Chair Powell to talk about that in his news conference. But the change in the runoff drew a dissent from Governor Chris Waller, who approved of the no change in policy rates, but dissented on the idea of slowing the balance sheet runoff.
Mike McKee, there's so much to work through here. Appreciate your time, sir. Apparently, stagflation is bullish. We'll get to that in a moment. We are firmer in the stock market by 0.6% on the S&P. On the NASDAQ, we're up by 0.8%. Mike went through the forecasts and the revisions. Let's do that again, because these are significant changes. Let's focus on 2025 and look at the median projection. The change in real GDP, the projection now 1.7%, down from 2.1% previously, those forecasts made back in December. Unemployment up to 4.4%. The previous forecast was 4.3%. Core PCE 2.8%. The previous projection 2.5%. And the median dot unchanged. So, Lisa, what we've got here is the Federal Reserve essentially saying inflation is going to be higher than we thought it would be. Growth is going to be weaker than we thought it would be. And as for policy, well, policy doesn't change. That is the stagflationary mix in the forecast that some people were anticipating.
Because we've heard it from all across Wall Street. If they hadn't done this, that would be sort of surprising, since they seem to be reflecting a general sentiment out there. Key question. How are they going to explain why? What has changed? Given the fact that, yes, we've gotten data that has come down, but we haven't necessarily seen a big spike up in inflation. And depending on what inflation expectations you've seen, you haven't necessarily seen them go up that much either. I do think it's interesting about quantitative tightening. I do think it's interesting about Fed Waller dissenting. And I'd like to hear a whole lot more. I also think it's interesting you're not seeing a huge reaction from the 10-year yield on that.
He's running. Talked about that a few times. We'll come back to that later. If you don't know what we're talking about, Jim Bianco has thoughts. I'm sure he joins us in just a second. Let's turn to the bond market. Bond yield.
Guys, this is a lot. It is a lot. And so if we go, what's interesting, the reaction to all of this is is not what is typical. If I go to the charts here, look at gold. I'm sorry, look at Bitcoin. This is Bitcoin. It's just dropping like crazy. There's a lot of uncertainty out there. Let me pull up gold real quick. I made a trade of it going down, and it blew up in my face right here. Look at after the Fed announcement, it just skyrocketed because a lot of the uncertainty. But even this, like, even though we see this big spike up back to it's closer to all-time high of 30.47, it just kissed it. It is coming right back down. Usually when we get this candle all the way up, it comes right back down, and look at it right now. Holy smokes. Yep. So it should come right back down as my traffic lights turn red. And typically when we see a bounce back up, we'll see a bounce right back down because it wants to find its home. It wants to find its home. And so we have so much uncertainty right now that people don't even know what to do. They are running back to treasuries to get a spot that they could be rest assured. So it's coming right back up. Guys, it's so volatile. It's not even funny. Thank God this is a paper account. I wouldn't be trading real money like this. But yeah, I think it will come back down into realization here. So what I'm going to do is actually put a take profit here, right there. Let me put my take profit. Let this one breathe, and a stop loss, kind of like where it's at right now. So yeah, I mean this gold trade is crazy talk right now. It's too much volatility. So let's move forward to the volatility index, the VIX. Let me change this screen here. Let's go to index dominator. The QQQs, as we guys know, this has been a very, very powerful index. It is turning over slightly, but I want to check out the volatility index. This is where we get to see like real feedback. Volatility is going down a little bit here. I still got a blue cross. Short term, midterm, still red. It's cooling off like the index. So the index goes up, the volatility goes down. So when the market goes up, the volatility tends to go down, but we're still at 20. So not a real big reaction to the Fed not doing nothing. So we want to see interest rates, but the Fed does not want us to go into a stagflation situation. We'll talk more about stagflation, what it is, in our upcoming podcast here. We'll talk about that and how it affects Bitcoin, how it affects everything. Stagflation as well as deflation. The deflation is a real thing. Deflation is a serious thing, and we got to be very careful with that. So I'm sorry, guys, nothing groundbreaking here other than they're not lowering interest rates. And we're going to see a weakening of the economy. So I believe that we are going to see a possible recession. I really believe that the markets will go down. And if that's the case, we're going to see some side pumps, right? So if we got SQQQ, so let's pull up SQQ. This is still going up. Like, I know we have a red dot here, but look for SQQ to be a good trade. If the market does go down, you will make a ton of money here. Right now we're at 36.65. I'm sorry, 32.79, and this could go up way past this 500-day moving average or 200-day moving average. And this is where we got a golden cross. So pretty amazing that we now can confirm that we just have more evidence that the markets are going to go down. And so I'm very, very cautious for people that are just in their investments. If you're listening to this podcast, give me a call. I want to help you. 813-448-3446. Visit us at CortezWM.com. This is no joke. Like, this makes money when the market goes down. Let's look at SPXS. SPXS. Here we are. Another ETF that makes 3 times the amount when the market goes down. So this is the S&P 500. This makes money when it goes down 3 times. So if it goes down 10%, this goes up 30%. If the stock market goes up 10%, you lose 30%. So this is a very volatile index. And this is great for money that you want to hedge yourself with, that you don't mind losing. If you're heavily in stocks, then you should have a hedge for you to bring equilibrium and get out of the correlation matrix and actually diversify your portfolio. This is a great ETF to look at. It's 3 times the inverse of the S&P 500. This is not meant for retirement. This is not investment advice. This is just simply education information purposes only. However, this would be a great trade for someone that wants to make money in the short term. So we have SPXS as a short. I just want to take a quick temperature gauge on KRE, which is the financial banking system. And we have another death cross here back in February. So the financials are going bad. People are cash strapped. I mean, people don't have money to spend. So yes, the banks are going to suffer. They could crash the banks on Trump. They could do a lot of things here. But the commercial real estate crisis is a huge, huge problem. And so the banks are going to have to take the L on that one and assume all that debt, and they will write off that debt. But yeah, looks like the banks are doing bad. We are seeing a massive death cross. It is breaching that 200-day moving average. These could turn red. They could stay green here. We'll see, but I'll be keeping an eye on it for a while. Last year, that's all I talked about, right? Because KRE was going up. And when we had banking issues, you remember like in 2023, how this just, it was crazy. It was over like 65 and went down to like low 40s, high 30s, 38. I remember when I was at 38, I was talking about this for like a year. It just happened. Boom, boom, boom. Look at all this volatility in the financial systems. So they make it seem like the banks are doing good, but we have massive momentum going down. So just be careful if you have CD monies. You want to be very, very, very careful that your bank, your institution is solvent. Because if you have a checking account, guess what? You don't own your checking account. Guess who owns your checking account? It's not you. When you sign on a checking account, guys, you basically give the right to the bank to have ownership of your money. And they only give you the benefit of withdrawing if they have it. So if you look at your bank and call them up and say, hey, what is the new account agreement assigned? You will go on a table of contents and look at the disclosures, and you'll see large cash withdrawal section on a table of contents of your disclosure statement. And it will have language such as, we only you only could be subject to the liquidity of the banks, the strength of the banks, and you don't have access to it. Even some banks would say you would have to hire your own attorney at your own expense to get the money out if they don't have it. Like, it is wild. Like, you lose your right to own your money when you deposit money in a bank. A CD is even worse. You're certifying that you're depositing, and then if the bank goes belly up, you are certifying that you relinquish all rights to the money in exchange for an interest. You certify that they could use your money in case the bank goes belly up. You become a bank bail-in depositor. They would use your money as a bank bail-in, and they determine the rate that they pay you back when they have it. Crazy, crazy stuff, man. Like, this is legit what's happening right now, and people don't even realize it. So we don't want you to not be educated. We don't want to fearmonger you. Yes, there's money to be made in the market. We want to make sure that your retirement's safe, that we have products in place for you so that your retirement can grow. You don't have to worry about all this nonsense. We have solutions for you. All you got to do is give us a call, 813-448-3446, or visit us at cortezwm.com, and I'm more than happy to help you. I can't talk to everybody, so that's why I have another advisor that is amazing, Josh. He is helping me with the load because we get emails, get hundreds of calls, and I'm only one person. You guys know I love being present with my family. I love playing hockey. I love helping at my church. I love exercising. I just love giving back to the community. And unfortunately, I'm only one person, right? I'm only one person. So I have hired help with some great advisors. I'm grooming them, training them so that they can be an assistance to us and that we can grow and scale this thing at a national platform. So this is bigger than me. I'm actually thinking about changing my name from Cortez Wealth to just America First Retirement Planners. We'll see. I'm praying about that. And it is not about me. It is about the cross first, America second. So with that being said, guys, I'm out of here. I'm actually going to California to do some hand-to-hand combat training. I really think it's cool to study and brush up on your skills as a man, as a provider and a protector. Some dweeb tries to come in my house. I want to be prepared. So I'll be training really intensely for the next 3 days and hopefully coming back stronger with my firearm skills, hand-to-hand skills, and a little bit of jiu-jitsu. We're training in the desert. So pray for me as I'm going to be with about 14 other men that are just amazing creatures, amazing God-fearing men that I associate with. So God bless you guys. I'm out of here. And don't forget to go to Get Me Lean USA, our new self-sponsored strategic partner. Lose weight, get in shape, and have the ability to claim your health back. And there's also a business side to it. You can promote it. If it is good for you, if you like it, you can share it with your friends, make a few bucks. Everybody wins. They are a naturally based company here in America. They're God-fearing patriots. I know them from the top and bottom. God-fearing company. And they are not here to put these crazy chemicals, the GLP-1s that Ozempic and Moderna are doing. They're destroying your muscles. But the crave of getting your health back is pretty amazing. And Get Me Lean USA, they're not the cheapest, they're not the most expensive, but they're just priced right. And if you go on autosave, you'll save, I believe, up to 20% on your third or fourth order. So get on it, support our show. The little few bucks that we make help support with this podcast, so I appreciate it. And also don't forget to like and subscribe on our Rumble channel at Scriptures in Wall Street. And yes, I love you. Thank you for supporting me. Go to getmeleanusa.com. If you want retirement advice, cortezwm.com. If you want to book or learn more about our strategy, AmericaFirstRetirementPlan.com. All the links are below. And my favorite podcast is The Color of Money. Please watch that before you book an appointment with us so you can understand our process. With that being said, God bless you guys, and we'll talk soon.